morning to one and all. Welcome to my YouTube channel. This is Narayan Rao Kovur. In this video, we will understand what is national income accounting or what is national income, methods of measurement of national income method. So, national income means national income is the total market value of all final goods and services produced in a country during a given period of time, usually one financial year, is known as national income. In other words, in general, a country's income is calculated by summing up the aggregate value of all the final goods and services produced in a country during one financial year is known as national income. Next, methods of measurement of national income. So in the previous video, we explained product method. So in this video, we are going to explain income method. So methods of measurement of national income. So income method. So the other names of income method are factor income method, factor payment method, distributed share method. So factor income method, factor payment method, and distributed share method. These are the other names of income method. Next, what is the data required to calculate national income through income method or total factor incomes generated in the production of goods and services. Total factor incomes generated in the production of goods and services. Think wages, rent, interest, and profits. Next. So, income method includes both actual values and imputed values also. In this method, it includes both actual values and imputed values. Imputed rent, imputed wages, imputed interest, imputed profits, etc. So here income is three types. One is labor income. Second one is capital income. Third one is mixed income. So now let us examine first what is labor income. Labor income is also called compensation of employees. Those are wages, salaries, dearness allowance, commission, bonus, employer's contribution to provident fund, and compensation in kind. Those are all best example for labor income or compensation of employees. Second one is capital income. Capital income or non-labor income or operating surplus. So capital income or non-labor income or operating surplus. So the examples are rent, royalty, interest, and dividends, undistributed profits or retained earnings. Next, third one is mixed income. It is difficult to separate labor income from capital income. That is, it is called mixed income. So, mixed income is self-employed services, traders, engineers, doctors, etc. and subsistence production and small commodity production in agriculture, trade, transport, particularly in underdeveloped countries like India or developing countries like India. So these are the three types of income: labor income, capital income, and mixed income. Next, how to calculate national income through income method. Right. So, first we have to calculate GDP factor cost. Gross domestic factor cost. GDP factor cost is equal to compensation of employees, that means labor income, plus operating surplus, that means capital income or non-labor income or operating surplus, that is rent, interest, profits, plus mixed income of the self-employed services, that is engineers, traders, doctors, or subsistence production and small commodity production in agriculture, trade, transport, etc. Plus depreciation, consumption of fixed capital. We add 4, then you will get GDP factor cost. So then how to calculate national income? That means that is NNP factor cost or national income is equal to, so NNP factor cost or national income is equal to GDP factor cost minus depreciation. GDP factor cost minus depreciation means so NDP factor cost. For NDP factor cost, we add net factor income from abroad, then we will get NNP factor cost. So NNP factor cost or national income is equal to GDP factor cost minus depreciation plus net factor income from abroad, then we get national income or NNP factor cost. This is the formula to calculate national income through income method, or simply national income is equal to W plus R plus I plus P plus net factor income from abroad also. So national income is equal to W means wages, R means rent, I means interest, P means profits plus net factor income from abroad to calculate national income. Right. So when we calculated national income through income method, there are some included. Those are called inclusions. We have to include. Those are, one is incomes of primary factors of production. So rent, wages, interest, profits, those are called incomes of primary factors of production. Second one is labor income, capital income, mixed income of self-employed. 3 types of income are included to national income. Third one is commission, brokerage of sale of second-hand goods. Only commission and brokerage of sale of second-hand goods taken into consideration to calculate national income. Next, fourth one is imputed services of factors. Owner occupied house, imputed rent. Farmer cultivated his land, imputed rent of land. So imputed interest, imputed wages, those are called imputed services of factors. Self-owned, self-employed, that is called imputed services of factors. So these are included when calculated national income through income method. Next, some of them are excluded, not taken into consideration to calculate national income, through income method. Those are called exclusions. Exclusions are, one is transfer incomes. Transfer incomes are pensions, so scholarships and unemployment allowance, etc. Those are called transfer incomes. So not included. Second one is income from sale of second-hand goods. Sale of second-hand goods. So already we take an income from sale of first-hand goods. So that is why income from sale of second-hand goods not considered, not taken into consideration for calculation of national income. Next, illegal incomes. Illegal incomes are the income earned from the illegal activities. Illegal activities are smuggling, gambling, so black marketing, drug trafficking, and bribing or bribes. That is called illegal incomes, not consideration. Next, capital gains. Capital gains are the profits for the sale of assets. So, profit from sale of land, profit from sale of shares, profit from sale of debentures, etc. So, that is capital gains, not taken into consideration. Next, windfall gains. Windfall gains are the sudden and unexpected return, unexpected income. So not any from not any productive activity. That is called prize money. So insurance claim, gift, and inheritance. Those are comes under windfall gains. Windfall gains. Next, prize money. So lottery prize money, and gifts and insurance claims, etc. Next, interest paid by the government on public debt. Interest paid by the government on public debt by one firm to other and consumption loans. So not taken into consideration while calculating national income. So these are the some of the exclusions are excluded while calculating national income. Next, applicability. So this method is applicability particularly in small scale sector. Small scale sector. Okay. Next, thank you for watching. Like, share, subscribe, and comment.